Okay, we are recording. You want to get going, Matt?
Um, let's just
You want to wait a couple?
wait
We'll
just
wait a
like
couple
two
minutes.
minutes, and
Yeah.
thank you very much for the people that came on time. We really appreciate that.
Yep. Absolutely. I'll pause the recording then. So now we are recording again. Thank you for everybody who's online right now. There's a few people that are going to join. I see the waiting room is getting busy here. Anyways, let's get started. We got people that have doubled up. I just got a chat request. Anyways, okay, so my name's Lyle MacDougall. I'm a certified financial planner, and with me today is Matthew Fearn. He's a CPA. What does it stand for? Chartered Public Accountant?
Something like that.
Something like that. Means he knows his tax stuff. We have been poring over government documents, business documents, to try and get the most up-to-date information as we possibly can. Likely most of this is going to change at some point in time, but at least it will arm you with some of the right information for the government measures moving forward and where things are going to go. So let's just get started with that. So again, we're going to provide the information as best of our knowledge. This is the legal stuff. If you want actual tax and legal and financial planning advice, we would recommend that you would book an appointment with either Matt or myself or both of us, and we can get you the information that you need to go. So who we are, who are we, how did we get here, what are we going to learn, and what's in it for you? Okay, Matt, why don't you start?
Yeah, hi, I'm Matthew. I'm an accountant. I've been an accountant for 26 years this year. I'm a CPA. We're a full functioning accounting firm, and we got some exciting new news. It looks like we're going to be having a U.S. addition here, so we can actually do U.S. taxes, including corporate and personal taxes. So we're continuing to grow. We help everybody with taxation of small business, personal taxes, all that kind of stuff. But yeah, that's me. 26 years of experience this year.
And I am Lyle MacDougall. I'm the Managing Director of Bakerview Financial, Certified Financial Planner. I've been doing this for a long time, and just trying to get some information out to everybody. That's why I recruited Matt to come and help me just get some information out. Education is the key. We really want to help as many people as we can. I know we can't see everybody as much as we'd like to, and we are both very busy, and we're trying to do what we can to get the information out. So this is probably the best way to get our advice without having to actually book an appointment and sit down with us for 45 minutes to an hour. So we'll just go from there. But I am going to warn everybody who's watching and listening right now that this is it's going to be very interesting, and we're not going to pull any punches on this stuff. We've got a lot of things as a country we need to figure out, and we've got to really kind of get on it. And we're not here to critique anything with government measures. That's not our job. But we're just going to show you some facts and what we think is going to be the result of that. And that's the problem. It's every single time they do something, there is some sort of a consequence. So that's why I put this slide on there. It's going to be hard, but it's not going to be impossible to get through this. We are in the third inning of a 9-inning baseball game right now when it comes to all this COVID stuff. So we're just in the first. We're not even in the 7th inning stretch yet. So it's going to be a long road ahead. So if we've done 6 months of COVID so far, and we're only in the 3rd inning, we got about another 18 months to go until we kind of panned everything out and figured out where we're going to go. The types of small business we're going to talk about is sole proprietorships, partnerships, and corporations. Different ones have different rules for different types of benefits. So let's just we'll get right into the federal ones. The federal government loves their acronyms, like a lot of large companies. Everybody kind of knows what the CERB is and was. That is being transitioned to the Canada Relief Benefit. The CEBA, which is the $40,000 interest-free loan for the next 3 years, and then you have to pay it back. And then if you don't pay it back within the time period, they're going to charge you a 5% interest rate. The wage subsidy has been extended until 2021. I couldn't find the exact date, Matt. Do you know if there's an exact date on that?
We're getting a lot more information from the throne speech, and I suspect that's actually going to change.
Okay. You think they're going to decline or decrease it, or they're going to?
Yeah, well, they said it's going to be all the way to the summer I think that's changed. I think within the legislation, they're trying to give themselves some leeway because of what's happening in Ontario and Quebec, more or less than what's happening out here.
Mm-hmm.
So it looks like they said it was till next summer, but we'll have to see.
Yeah. Okay. That's interesting. The KECRA, which is the rental assistance, and then there's two new ones that have been rolled out. They were talked about in the throne speech. They haven't passed legislation yet. That's what those stars are for. Is that all of this still has to pass through legislation in Parliament. So it's going to be debated and everything else. So again, they don't have all of the rules. They've stopped the CERB though. That's done.
Yep.
So Matt, why don't we talk about, we have a few slides on the Canada Relief Benefit. Why don't we chat about the CEBA, which is the $40,000 loan for small business?
Okay, yeah, so that the $40,000 loan, as you guys heard in the throne speech, they're going to be lowering the limit on how to get it. I don't know what that looks like yet. Right now, you have to have $20,000 in aggregate spending, and you have to spend the $40,000 on certain costs. It looks like they're going to be loosening that up. So if you didn't qualify under the old rules, which is you had to have either $20,000 in payroll or you had to submit all the information that you had these expenses, then it's going to be lowered and you most likely will qualify for the $40,000. What it looks like yet, I don't know. Please give us your email address. The second that the throne speech comes law and I can see it, because it's always different than what is announced. As we all know, it never comes in what they announce. I can just put a one-pager together, and then usually it takes the banks about another week. So even though the extension is being to October 31st, I have a very strong feeling that that's going to be extended even further, probably into November, just because we still don't even have the full program yet.
So is the 20,000 requirement in payroll still there, or have they accepted?
That's the easiest way to qualify. If you've got $20,000 in payroll in 2019, it's basically you tell them that, they double check it, you get the money very quickly.
Okay.
The other way right now is the spending. So you basically have to send them a spreadsheet and send them your rental agreements to say, yes, I'm going to spend this amount of money and I can't get out of these costs. And then they give you the money. That's far longer. One or two of our clients, I think it took weeks. I think one even took a month to qualify under that. So who knows what they're going to do here.
Yeah.
I mean, there's enough fraud going around and we'll deal with that. That they can't do what they did with the CERB and just give it away like candy.
Yeah. Okay. So wage subsidies extended till 2021. We talked about that. CEBA. Okay. So the one thing I do know is that it's not hard to get if you are incorporated to get the loan program, and if you paid yourself salary of $20,000, dividend income does not count.
Yep.
If you're a sole proprietor, how does that work for the CEBA and sole proprietorship, Matt?
You have to send in the expenses.
Okay.
If you didn't have wages.
Okay, so if you just have income based on your sole proprietorship, and then partnership is the same rules as that.
There's one other thing that needs to be said.
Okay.
Read the fine print.
Yeah.
Okay? Because here's what happens if you okay to this loan. I did not take this loan. I never will take this loan. Everybody thinks I'm stupid. You have given access to Revenue Canada, your bank account. They don't even have to ask you. It's right in there. The amount of information that they are able to take from you applying for that loan, I did not feel comfortable doing. Therefore, I never did it. So I can't make that call. That's a call that each and every person needs to make. Mm-hmm. But if you find yourself in a situation that you don't feel comfortable with allowing the government whatever they're asking for, because there's a lot of information that they're not able to get, you might be like me who says, no, I'm sorry, I'm not willing to do that.
And there is that attestation that you have to abide by on the application that you.
Absolutely.
Again, there's all these little social programs that they want to do. The Canada Relief Benefit, we have a whole slide on that. We'll get into that. The ones that we do want to cover and talk about fine print. So in order for them to pass the throne speech, the New Democrats said that they wanted a sickness benefit for people to have access to.
Yep.
So this was written into the throne speech.
Yes, it was.
In order to not trigger an election, the NDP has propped up the Liberal Party. So the sickness benefit, as it's written right now, and I can read this from the government website right now. It will be $500 per week of benefit for 2 weeks of sick leave or quarantine in the event that the worker does not have paid sick leave with their employer. They have to have earned $5,000 in the last year. And it's going to be available for the next year starting September the 27th. It's going to go till the 25th of 2021. So it's not permanent sick leave for people.
No.
Although people are being, and this is what's been, it's been reported in the media that it's sick leave for self-employed people and for, no, it's not. It is a temporary benefit to get this through legislation. And it's only for if you've contracted or may have contracted COVID-19, or you have underlying conditions that the opinion of a person of authority would make them susceptible to COVID-19, and a person of authority would be a doctor, a specialist, or something of those natures, right, Matt?
That is, yeah, that's yeah.
Not your cousin down the road or somebody that you know on the internet.
Yeah. No.
And they have had to isolate themselves on the advice of their employer or that person of authority. So if the employer tells you go home, you might have been exposed to COVID, you'll qualify for this benefit. Again, that's the fine print. That is there's a lot of restrictions on that in regards to the sickness benefit. So again, I'll summarize that. It's good for a year. It's only for COVID symptoms. It's not for if you get cancer. It's not for if you get the flu, a regular flu. If you're COVID negative, they might deny it for you. What else would be some of the things that you could take some time off for? It's not holiday leave. You can't take time off to go on vacation. And yeah, it's there for people that have had to go off work for COVID. Nothing else. Anything else to add there, Matt?
No, I mean, that's really, the real problem is they're going to audit the heck out of this.
Yes.
Okay. And they're not going to do it now. And everybody's like, oh, Matthew, you're out to lunch. And as most of you, some of you know me, I know that their audit department, all you have to do is go look at their hiring practices right now to see what they're going to do. And they're going to catch everybody on the next year's tax returns. Basically, everybody's going to file their taxes, and if they're going to get some information, and anybody within a range is going to get audited. And if you sent an email that said to anybody, hey, we need you back, and you didn't go back, you're going to have to repay this.
Yes.
The CERB was very, and a lot of people think this is just, oh, it's just free money. Anybody's getting it. You know, thank you. As they said on TikTok, thank you, Uncle Trudeau, for the Louis Vuitton bag.
Yeah, Uncle Justin.
Yeah. So just be aware of that. I've been telling my clients that there's definitely people that qualify. Okay, I'm not scaring people, but to sit there and think that you didn't have to look for a job, or you were asked back to get a job and didn't come back. That's not. I have a funny feeling you're going to have to repay it. And
we'll cover that in the CRB slide. The other one that's been talked about is a caregiving benefit. So again, not through legislation yet. I'll read out from the government website what it is. So it's a $500 per week benefit for up to 26 weeks to help one claimant per household. One claimant, not both parents, one claimant per household.
Yep.
And it has to be because your daycare has shut down or reduced capacity, or the schools have shut down and reduced capacities due to COVID-19. It is not so that your kids can stay home and homeschool.
Yeah.
And it's only for one parent. So I guess technically you could have one parent that's on the Canada Relief benefit and the other one can be on the caregiving benefit. But there are restrictions on that. Let's see what the fine print is here. The benefit is not accessible to workers who choose to keep their dependent home. It is not available if you choose to stay home because you're afraid of COVID or you're afraid your kid's going to get COVID. You are not entitled to this.
The best way to say this is if you want to take this benefit, you go to your doctor and make sure you've got a note. Okay? Say you've got a son or a daughter with upper respiratory problems, say they've had surgery in the past, pretty sure you're going to be okay getting a note and you're going to be able to claim this.
That's the only way. And doctors are not going to sign on it, and good luck getting into a doctor right now because you got to pay for the notes. Let's see. That's the federal emergency benefits. there's a lot of stuff that's coming down the pike. And so we're going to have another one of these sessions in the first week of November after the US election. And after this has all gone through,
The internet might not be working by then.
I sure as heck hope that we have everything going on after the US election. Who knows though, right? So we'll have another version of this in November, first week of November, and we'll talk about either the fallout from the election or the results of the election or any of those types of things in the States. At the same time, we've got provincial elections coming up in BC, Saskatchewan, Ontario, not yet, neither is Quebec. But those are all things that are going to really impact everything that's going on. This is a quick slide because the provinces, we're in election mode right now, so there's a lot of stuff being thrown around. Nothing is concrete.
Nope.
But the reduction, so we all have a reduction in our property tax. That's been already done. BC benefit for workers. If you qualified for the CERB, you got a one-time payment of $1,000, I believe, tax-free. You had to have already applied for that, and you apply with the province. So you make a phone call to them, and they decide if you get it or not. Enhanced climate action tax credit. It works like every other tax credit that you have based on climate change and your carbon footprint and all those types of things. BC Hydro has some benefits still. You want to call them and find out what exactly they're going to do. And then the suspension of BC employer health taxes for 6 months, that's done. That's no longer around. We've been in this for 6 months since March, if everybody can believe it or not. So we've gone through half of a year of lockdown measures and that type of thing. It's pretty crazy. Okay, more options. Mortgage deferrals, those are done. We're going to talk about that in a later slide, what the impact of that has been. Business loans deferrals, those are done. So if you have a business loan and you've been deferring your payments and you got approved for deferred payments from the institution that loaned you the money, those deferrals are done. Service BC offices are still open, of course, and the resources that Matt and I use are the Canadian Federation of Independent Business.
Yep.
And actually, the nice thing about our November one is I have somebody from the CFIB that's going to be on. So this is going to be a very good webinar in November. I think it's November the 3rd. That it is going to be vital. If you have any questions for somebody who is a lobbyist with the government that fights for small business on our behalf, to the politicians and the people that make the decisions and the stakeholders and shareholders in the government, this is the chance you have to have a chat with them without paying the membership fee or anything like that. I'm a member of the CFIB. I'm a proud member of the Canadian Federation of Independent Business. I think it's a great program. I think it's a great thing. The amount of resources that I've been able to take advantage of with this has been incredible, and it's not expensive to become a member. Matt, filing taxes, they changed all the tax dates. Can you kind of go in on that?
Yeah, they put it all the way to September 30th. And the other thing I'm going to tell you is some of you might have received that lovely little letter that says, hey, you got to pay back your GST credit because stuff wasn't sent in. Don't worry about it. It's all going to get kind of sorted out this month. Millions of them went out. I have a funny feeling that they went out in error. Mm-hmm. They won't tell you that. The other thing that I want every person on here to do is, just due to the amount of fraud that has gone on, please set up your My CRA account. Please set it up. And then double check to make sure that the information on there is correct and that you have made sure that nobody is committed fraud. It's a nightmare for people who have had this happen. Getting through the CRA, be prepared to wait for over 6 hours, and they'll cut you off at exactly 2 o'clock Pacific Standard Time, and you'll just be on hold, and then they say, oh, sorry. Trust me, it's had it happen to me more than once.
Yeah.
So, just trying to give you a little bit of help here on CRA. So please, if you haven't signed up for My CRA account, please do. Double check your information. If there is something wrong and somebody has done something on your account, notify CRA immediately. Please do not wait. I am not an expert in this, but the amount of fraud is through the roof.
Yeah.
Government said 9,200 and some odd accounts. It's far more than that.
Oh, they've said it's up to 50,000 people have collected improper benefits from all of this stuff in Canada.
Yeah, I still don't know how that happens, because clearly you have their banking information.
Well,
so
yeah.
Put up the account somehow.
Well, there's the improper collection of CERB. There's people that were double dipping.
Yep.
Because there's no tracking right now, but trust me, they are going to track you. They're going to track everything that they've doled out. And it's not going to be this tax year, Matt. It's going to be next tax year.
It's going to be next year. Yeah, that's what I'm telling everybody. It's next year. Next year.
2022 is going to be a rough year for a lot of people that didn't do the proper channels of collecting some of these.
Oh, I think they'll get them before then. I think it's the latter part. Oh, 2021. Yeah, they'll nail them in 2021. Yeah.
So that 2021, 2022 tax year is going to be a rough one for some people. And then if you do get audited, I would recommend you circle the wagons and don't give them any more information than they already have. Because if they're auditing you, they've already got kind of an inkling that something was going on. Let's see what we got. Okay, so this is the new CERB. Some people are going to be very disappointed with this if you're collecting the CERB right now. The CERB is the Canada Emergency Relief Benefit. Again, we use all these acronyms for people that don't know. So now we've got the Canada Relief Benefit. So this is exactly from the government website. Again, still has to pass legislation, pending legislation due to the proroguing of Parliament. They never had a chance. So because they stopped Parliament, they stopped the government for 3 weeks. None of this stuff is actually ready to go. So we have a $500 per week benefit that's eligible. Applicants must reapply for every 2 weeks. So much like employment insurance or UI or however, if you've ever collected it before, it's exactly the same way. And it will be up to 13 periods, so 2 weeks each period, so half of a year. And you'll qualify for half of a year. And it's available between September the 27th of 2020 and September 25th of 2021. Again, pending legislation. Here's your eligibility. You must have a SIN number. You must be at least 15 years old. You have to be resident and present in Canada. You have to earn a minimum of at least $5,000 in 2019 or in 2020 or the past 12 months. You must be looking and available for work, and you must have had an average weekly income of loss of at least 50%. Non-eligible applicants they have voluntarily left or quit their job. So again, if you were quitting and thought that we were going to have universal basic income or what other things that we're bantied about, it ain't happening. You need to go back to work. You will not collect the Canada Relief Benefit if you're not looking for work. If you failed to return to work, so Matt, we were kind of talking about this because both of us are employers, we have staff. And some of them have quit and some of them walked away.
Yep.
And we're trying to get those people back. Those people that have quit or walked away from their jobs will not qualify for this unless they're actively looking for a new position. And it doesn't really matter what position you're looking for. So you're not going to have the luxury of finding something that you had before. And it's a reasonable offer to work. So a reasonable offer to work is basically, here's a letter of employment. I'm going to offer you a job. There's no pay ramifications, benefits, pensions, any of that stuff. That doesn't really matter for employment insurance people. So if you quit your job, try and go get it back. Because that's what I can tell you beyond a shadow of a doubt, people are screaming for employees, and there's been too many people that are sitting off still. Most of my clients are small business owners, and every single one of them are screaming for staff. They don't have enough people to work. And they've had to reduce hours, they've had to reduce their income because they don't have enough people to work in their stores or their business or their factories or any of those things. So I don't know how much money is going to be doled out in this, Matt, because in Vancouver, I looked on Indeed yesterday. In Vancouver alone, there's 28,000 jobs listed on Indeed.
Yep.
28,000 jobs in the Vancouver area within 25 kilometers of Vancouver. That's not including the Fraser Valley. So we've got there's a lot of jobs that are out there for people that want to go to work. Anything to add here, Matt?
No, I mean, the people who, took a couple months off, they were scared or whatever. I mean, that kind of seemed to change at the end of April. So if you stayed away, I mean, I think you're going to have to repay this personally, unless my wife was taking care of kids. I mean, those situations are going to hold up, of course, right?
Yeah.
Up until the summer. But for a lot of millennials, and I'm not trying to pick on millennials, but this was the group that affected about 90% of my clients. I don't know about you, Lyle, but it was the millennial generation. They were just happy to sit at home and play video games.
Yep.
And what's even worse is I keep on getting called by mothers, and I'm not joking, that say, hey, how do my kid qualify for this? And I said they don't. And if I were you, I would get them to get a resume out, because they can get a job today, but they're probably not going to get a job by the end of October, because the job market will fill.
Yeah.
Once people realize they don't qualify for this, and this one's going to be a lot different than the CERB, they're going to make you qualify for this, okay? It's not like the server that just gave you money. You're going to have to qualify for this. And people are going to realize, oh, I didn't qualify. I got to better go get a job. And that's when you're going to see all those jobs build up. So what I tell everybody is, if you got, I'm not trying to put them down, but if you got a kid sitting on your couch playing video games all day long, get them on Indeed today, because at the end of October, they will not get a job.
Yeah, they'll cut you guys off they'll cut anybody who's not actively looking for work off pretty quick.
Very quick. Yep.
And they're not reasonable either. I'm going to tell you this right now. Employment insurance auditors and adjusters are not reasonable. They have the rules, and they don't listen to reason. They don't also listen to your excuses or anything else. So, I mean, here's the thing, go back to work. There's lots of jobs. If you're afraid of COVID, I don't know what to tell you. If you have sickness or whatever, like that's between you and your physician, if that's an issue. But this is what's not being reported in a lot of these things, because the media is coming out and they're saying there's sick leave that's going to be built in, there's caregiver leave that's going to be built in, and then we've extended this to an EI type of thing where if you were self-employed, you'll qualify for this. That's a good thing about this, Matt, is that self-employed people, if you are self-employed and you had to shut down your business, you will qualify for this as long as you're looking for a job. But again, I know that if you were self-employed and you've had to close your doors permanently, that sucks. It's terrible. But at the end of the day, and you can go back and look at the recordings when we first started doing these, Matt, I said, if you have a job, work your job, put your head down and go to work every day. Don't complain, don't quit, don't make any drastic life decisions right now, because we don't know how this is going to pan out. And now we're seeing how this is going to pan out, and people need to go back to work.
Well, your next few slides will really help people understand what happened.
And yes, exactly. So here is one of the things that we can kind of look at. So we always talk about our household debt ratio. Before the pandemic hit in Canada, it was at a record high of 171%. So during a pandemic, when people were not working, we had 20% unemployment. Apparently, we all found a whole bunch of money to start paying off our debt. And as a country, we paid down 171 to 158. So we paid down 14% of our household debt as a nation on average in Q2 2020. That's not right. In a pandemic, that should never happen. It should be going the other way around. So what happened is, and what they're thinking and what we've heard through financial institutions is, people deferred their mortgages. People took the money from the CERB or were continuing to work. They just deferred their mortgages, however they just just because they could.
Yep.
They were either still working or collecting the CERB, or both. And then they paid off their credit card and lines of credit. That's really what happened. So you don't have this going on. So what this shows is that there was too much money going into the economy from the government. There's too much of our money as taxpayers going into the government or going into the economy. And that was great. It was wonderful because people were still buying stuff. There wasn't that fallout at that point in time. But all they've done is they've extended the suffering out. So our friends in the United States, they're suffering now because they didn't do a lot of the things that Canada did. But the reality is they're going to be a lot better off a lot sooner than we are as a nation, because they're suffering now. Canadians, we're going to start suffering here shortly, and I can show you in the next slide that's going to be very apparent as to why. So this is a very telling stat. The banks don't like this stat, everyone. The banks do not like this because the banks make money on that spread. So this is where they make their money. This is how banks make billions of dollars. It's all interest payments that we have on our lines of credit. That's pure profit for them. So when their pure profit margins go down by 13%, they're not going to be very happy, and they're going to be either trying to recoup that somewhere, or they're just going to raise fees or something like that. So, or people as Canadians will probably spend our way back up to 170%. So I'm not too concerned about that. But Matt, do you have anything to add on this? That's a very telling slide.
Yeah, I mean, the people that were smart, I mean, when this all came down, I mean, we were all pretty scared, especially business owners, restaurant owners, you know, people like that. And we took advantage of what we could. The smart people, they said, well, what do I do with this? And I said, well, take what you want or you feel comfortable doing and work on your debt, which is, I guess, clearly what happened to a lot of people. They worked on their debt. Problem, though, is now we've got the other side of the coin, which Lyle's going to show us. We've got ourselves in a bit of a pickle here with fiscal responsibility on a federal level.
Yeah. And just to add to that, Matt, that these deferrals, these mortgage deferrals is not free money. Like you still have to pay that mortgage payment back. So either you pay it back at the end of the term of your mortgage agreement or you pay it back when you sell your home.
But I didn't do it.
We paid ours all the way throughout.
Paid mine too. It also showed up as a non-payment on your credit bureau until you made a payment. So
yep.
I had a lot of people really upset about that, and I said, "Well, then go make a payment and then go off your schedule."
Yeah, so the deferrals were over. I think people took advantage of the deferrals whether they needed them or not. So that was a big eye opener. And again, this is I have no concrete information, but in the event of a second shutdown, I don't think there's going to be a second shutdown because we can't afford it. And the next slide will show you we cannot afford it.
Nope.
And this slide is very giving. This is very telling as to why. So what this is our balance sheet assets to nominal GDP year-over-year growth. But basically, this red line, this is Canada. This is the amount of money they've printed based on our GDP in the last year. That's a lot of money. Even in 2008, 2009, the Federal Reserve here, the United States, that was a US crisis that kind of spilled over to everywhere else. That was a banking crisis and they got out of it by printing more money. It's called quantitative easing, if anybody remembers that from 08, 09, and 10. In here, they had quantitative easing 2, and now we're at quantitative easing 3. And this is where countries just print more money to try and pay off debt. It devalues their dollar, it devalues the currency quite a bit by printing more money. So if you remember in this time, our dollar, because Canada did not do that much quantitative easing in 08, 09 because we were in a good position because we were fiscally prudent as a country, as a nation, and we did not have the fallout that a lot of countries had in 08, 09 as far as the recessions are concerned. So if we look at this from what the US response was in 2008, 2009, they printed 150% more money than they printed over the previous years. Well, hold my beer, Canada. Look at this. We're at 456%. So there's the only thing that's going to happen is that there's more money, more Canadian money on the market, which if we look at our supply and demand curve, the more of it that's out there, the lower the value it's going to be. And the demand will be less and less because we don't have the economy to back this up. So if you're looking to invest outside of Canada, as far as financial planning is concerned, I would highly recommend doing it before our dollar becomes devalued even more. This is a very telling stat. I just got this yesterday. It was released yesterday. It's from Bloomberg, and it's the real deal. It's pretty scary.
You know, the other thing that's pretty scary too, Lyle, we don't have a slide for it, is if you go into realtor.ca today.
Oh, yeah.
You'll see that house listings have absolutely skyrocketed.
Okay, I did not know that it was. I've
been looking at it because there's some, you know, me and Michelle are thinking of selling. We've been thinking of selling since March, and there is thousands upon thousands upon thousands upon thousands of listings that have gone up in the last 4 weeks. It's pretty crazy. Yeah. What does that tell you? Why are they doing that? They're trying to get out of the market is what that tells me.
Well, so you're going to see a significant shift in demographics. And again, we can't really tell right now because we're still in the like I said, we're in it before. We're in the third inning of an inning baseball game. In ninth or eighth inning, we can take a look at the demographics and say this is where the changes are going to be in our economy. But here's the thing. Businesses have figured out that they can have their people work from home. They figured out that they don't have to have all of this commercial real estate. They've also figured out that they don't have to pay them as much if they're not commuting.
You've got,
So
yeah.
they figured it out quite quickly, and they'll say, okay, we'll give you a pay cut, but you get to work from home. People are signing up for that. So because of that, the downtown cores of most of many cities, and I know in Montreal, listings for condos were up like 75% or something.
Yeah.
That's pretty crazy that listings in Montreal were up 75%, and they're still in the midst of their kind of pandemic. They have way higher numbers than we do in BC. So again, this is not a pandemic thing. This is an economic thing. Like, we're not talking about the sickness. We're not talking about like the response of this is strictly a tax and economic outlook for what we're dealing with right now. And what this shows is that we took it seriously enough as a nation, as a country, to deal with the pandemic and the lockdown and stuff. But I think we took it a little too seriously, and we kind of went a little bit crazy. And that's not gonna just go away.
No.
So we've got some real serious questions to have answered here in the coming years, and it's gonna be ugly. And it's gonna, like that slide I said, it's not gonna be easy, but it's not gonna be impossible either. So we can kind of talk about the mortgage deferrals. Like you had kind of said, listings were up, Matt. Well, mortgage deferrals are now done. So if you can't afford your home because you either lost your job, or you want to relocate out of the city, or you want to relocate somewhere else, you're going to list your home. Listings go up, prices will go down. That's fine. And that's a normal situation for most markets. But yeah, homeowners are going to need to start paying their mortgage payments. And so depending on whether or not they go back to work, or if they can find a job, if they quit, again, a lot of these things where people made the decisions to quit their job because of COVID, they took the opportunity to quit their job because they didn't like it or whatever, and they lived on the government money for a few months. I think this could have a real significant impact on the housing market in major centers. I don't think that it's going to really impact, like, I'm out in Abbotsford in the Fraser Valley. Matt, you're out in Langley in the Fraser Valley.
Yep.
I don't think it's going to impact out here as much as, say, Vancouver, Burnaby, Richmond, those types of places. And the other part, we'll kind of cover that, but a big part of the reason why the housing markets in Vancouver and Richmond and Burnaby are so high is because of immigration. Immigration is down 60%. So we can kind of cover that in the next. So economic updates here. Tourism is down 80%. Government debt, that's quantitative easing. We've printed more money, 450% more than we've ever printed before. Bond buying. So basically what's going on is the government of Canada is buying the Bank of Canada is buying, with all of that money that they printed, Canadian government bonds, which are debt instruments. So they're buying all of these Canadian bonds. That's what quantitative easing 3.0 is. We're buying all these bonds up, and we're basically subsidizing our own stuff. We're printing money, and then we're paying ourselves a loan. That's not a good recipe for fiscal success. You don't rob Peter to pay Paul. Interest rates are low, and that is the only thing that is going to save our bacon here for the next few months and years even, is that interest rates are going to be held artificially low. There's no interest in raising interest rates at the Bank of Canada. They're supposed to be independent of the federal government. However, there is obviously some sort of communication that's going on right now. So they're going to keep interest rates low. Inflation is going to start trucking along here once the economy starts to recover a bit. And they want to control inflation with taxation, which is, I think, a big mistake. So you're not going to see interest rates going up. You're going to see taxes going up. Unemployment, I haven't seen the latest unemployment numbers, Matt, but they were up around, they were above 10%. I know that. We were the worst in the G7.
Yeah, we're not doing very well.
And immigration is down 60% in Canada. So all of these things are showing, yes, we survived the worst part of the pandemic technically, but again, you see the suffering that's going on in different countries. The United States, for one, is suffering right now. Italy suffered greatly a few months ago. Iran suffered significantly a few months ago. India is kind of suffering. We were kind of isolated because we all kind of we did what we were told to do. We were good Canadian kids, and we were told to stay home. We were told to stay home and not give each other hugs and not go anywhere. And we did that. And we were paid to do that. However, as an economy, and this was the thing you can't just do that. You can't just have everybody stay home and not work. And this is now we're seeing the results of that. And again, your guess is as good as mine if where things are going to go, Matt.
Yeah, a lot of people disagree on this, which, I mean, you can understand. The problem too, though, is, Lyle, is I do believe that our debt was downgraded twice. Am I right with that?
It's downgraded once.
Well, I thought we went from AAA down to like a AA. I thought
we had golden credit. We were AAA plus, is what they kept touting, that we had the best credit around.
No, we don't.
And now we're down at AA.
That's right, but that's more than, because it did more than one step. That's like 2 or 3.
Yeah, we're down to 2 things on the, and we're still at AA credit. However, if you just
look at the world.
Yeah,
Let's go.
Yeah, we are not in good shape. So people need to go back to work. We need to have fiscal stimulus to go, people get back to work and build the economy back up. So again, go to work. If you have a small business, get the $40,000 loan. Keep your doors open as much as you can. Right now is not the time to do any kind of try and grow your business. Your business right now, unless you're in a growth kind of market right now, like you sell PPEs and you can see the future of where things are going to go with personal protective equipment and that type of thing. But right now is you basically just survive. Just get through it. Put your head down and work and move forward. Some businesses are going to do really, really well, but honestly, small business right now, we just need to keep our doors open and keep things going, because the larger corporations, Amazon, Microsoft, Facebook, all the social medias, all Netflix, everything, when we're sitting at home consuming information on our internet and stuff like that, those companies are doing wonderful. So unless you're on a system where people can stay home and shop, you're not going to do as well.
The top 1%, top 1%'s wealth, I was told by somebody, has doubled because of the COVID-19.
Yeah.
A good example of that is I have a ton of clients that had to close their doors because of the pandemic. Walmart got to keep their doors open.
Yeah.
I can't tell you the product, but I can tell you what happened to one of my clients. They sell a specific product. They have a licensing agreement. They had to close their doors. Walmart never carried their product. All of a sudden, Walmart's carrying their product. They've lost over 70% of their sales because everybody's just going straight to Walmart.
Yeah.
Even though it's an inferior product and everything else. And Walmart never carried it. So they had to close their doors, and they're done. They're done. And it's not fair. That's what I'm trying to say, is that the Walmart got to stay open and sell all the goods, and everybody got used to going to Walmart. And these other companies that, quite frankly, could have been safer because it's smaller, had to close their doors, and the top 1% just got richer. So
and because of the employee situation, where a lot of employees quit, a lot of employees didn't want to come to work because they were afraid of COVID. You know, that's real stuff that's happening to a lot of small business, whereas Walmart can absorb it. They've got millions of employees. Costco can absorb that. They've got millions of employees, or hundreds of thousands of employees. Like, they've got employees everywhere. They can absorb these types of things. And all Walmart did was build more self-checkouts.
Yeah.
So they're still able to do all of the things that they were doing before, but not really take the hit that a lot of small business had to take. So this is a money-making machine. This is apparently what the governments have decided to do, is start printing money hand over fist. Financial planning post-COVID, well, I have some thoughts, and I have some ideas as to where things are going to go. You're going to see a lower Canadian dollar. You're going to see the value of certain commodities going higher. Canada will be positioned in a good way for a lot of these things, because we do have a lot of resources. If we are able to, use our resources and mine some of them, if we can find the human element of getting people to work and that type of thing, then we have the potential to get through it. But there's I think because we're kind of in that month, the transition month from the CERB to the next one, I think you're going to see in November and December a lot of upheaval. You're going to see a lot of people that aren't very happy. You're going to see a lot of things that are that are just kind of oh. Anyways, I don't know what else we're going to be looking at as far. I have, like I said, I have some suspicions and I have hunches. But what I am going to say is just keep working, put your head down, go to work, do your thing. That's all you can do. Matt, do you have anything to add?
Just if you want to get a one-pager just when the throne speech legislation comes out, please just let Lyle have your email, and we'll get that out to you as soon as we've gone through it in great detail. Because some of these programs sound great and the announcements sound great, and then you go through try to deal with them. I can tell you right now that rent subsidies being a pain in the butt and has not been administered very well at all. I can see why many businesses decided, landlords decided not to use the rent program. It was done really poorly. I got to be honest with you. I've had to do it. I will not do it for any more clients because of how much time it's taken me. And one last thing, make sure that you've signed up for my CRA account, please.
Yeah.
If you haven't done that already.
And what I would also recommend is that, I mean, everybody's in a different situation. If you have to make some business decisions, please reach out to either Matt or myself. We would love to help you out if we can. Again, this is it's only going to become more and more complicated and more difficult to navigate the waters. If you do self-investing, there's going to be certain things you're going to have to be aware of as far as investing for yourself. If you're going to do your own financial planning, you're going to want to be set in the right direction, because there's so many things that are out there that are going to be, and that slide that was just released, and you're not really seeing it anywhere, that we've printed that much money, but we can't print that much money and our currency is going to be worth 50 cents against the US dollar. So what does that tell you as far as, like, we're going to be earning Canadian dollars here and buying goods from the United States? That just means our costs are going to go up, which means inflation is going to go up, which means they're going to have to control inflation with either raising interest rates or they're going to raise taxes. It's not a good situation. It's not a good recipe for success on fiscal coming back, a good comeback. So again, I know they're talking about building back better. We just have to not go bankrupt in the next 6 months to a year as a country.
Yep.
Because we have the unlimited potential to print more money, but that doesn't just come with, without any consequences. Anyways, we've talked a lot. We've been on here for 45 minutes. Matt, thank you so much for your time. I appreciate it. Thank you to everybody who tuned in, and we're going to post this on YouTube. So if you want to watch it again, just come to my website and you'll have the link for that on my website, bakerviewfinancialsolutions.ca. We'll give you a couple minutes. If you have any questions, please put them in the chat, the Q&A section, and we'll go from there. But if we don't get any, then have a good rest of your day, everybody. Okay, we're good to go. All right. Thanks, everybody. Talk to you soon.